I've been thinking of buying a house or a townhouse in Nashville and noticed every listing keeps having price cuts. Seems like places, especially townhomes, are staying on the market for months with multiple price cuts. Anyone know why? Is this a Nashville specific thing? Wondering if I should sit on the sidelines and keep letting prices come down, or if now is the time to buy before interest rates go down. In this video, I'm going to give my best answer to it, which, by the way, it was kind of cool. I didn't realize this. Someone texted this to me, but look, someone gave me a shout out. Check out Ethan Flynn's YouTube channel. He presents data on the Nashville housing market. That was like really nice, by the way. So John Hazard Wandering and Reverend Love, thank you. Let's answer this question. Is there going to be price drops in Nashville? Let's take a look at this Resi Club Analytics. This is based on Zillow home prices. We've got 60 markets that are seeing falling home prices right now based on what Zillow is seeing. Of course, Austin leading the way, Tampa, San Antonio, Phoenix, Dallas, Jacksonville. We're seeing a lot of Florida, Arizona, Atlanta, Georgia, Texas. By the way, there's a lot of North Carolina on there. Myrtle Beach, Conway, North Myrtle Beach, South Carolina, North Carolina, Durham, Chapel Hill just went slightly negative. Charlotte, slightly negative. Raleigh, Cary, North Carolina, down 1%. So we are seeing prices drop. It's pretty interesting. What we don't see on this list, believe it or not, is Nashville, Tennessee. Nashville, Tennessee is still positive, albeit very flat, but still positive. But do I think that we could make it on there? What's the process for price drops, and do I think prices could decline? Well, here, when we talk about Middle Tennessee and Nashville, typically we're talking about the greater Nashville area. It's these 9 counties, Davidson County being like the urban area. But then you have like Hendersonville and Sumner. We've got Mount Juliet, Lebanon, and Wilson. We've got Murfreesboro and Rutherford, Franklin, Thompson Station, Nolensville in Williamson County, Columbia and Murray. So anyways, so here's our greater Nashville area. And so what I did for this video is we're going to look at all the listings. This includes single family and condos, and talk about what the process is for why prices could drop. Now, this is a little bit different because normally I just look at single family. So hang with me if the numbers look a little bit different than normal, but the trends should be relatively the same. Now, keep in mind that prices dropping in 2022 did not come from distress, but from a reactive, nervous seller. There's kind of 2 ways prices could drop. Sellers just believe prices are going to drop and they freak out and sell their house for less, or sellers are forced to sell, which is typically how you really get price drops, right? Distress, foreclosures, divorce, death. So back to the first scenario where sellers just kind of freak out. Now, the way sellers might freak out is you get a parabolic growth in inventory. Well, we look at active listings here, we can see it is bending up much faster than it did last year, much faster than it did in 23. And we're talking about 9,800 active listings versus last year, we were at 7,100. This is almost 3,000 more active listings. That's insane. In 1 year, we're talking about, it's like a 35% growth. You guys do the math. Tell me in the comments. Okay, so huge growth in inventory. All right. The next thing we need to see are price cuts. Now, price cuts are skyrocketing, but if you talk or listen to Altos Research, Mike Simonson, he would say it's more important to look at price cuts as a percentage of active listings. Okay, fine. We look at price cuts as a percentage of active listings, and we can see that we are much higher than we were in 23 and 24. We're sitting at about 32%. Now, why is it not growing as much? We have that parabolic growth in active listings. So even though price cuts are growing, they can't keep up with the growth in active listings. Okay, now once you get active listings growth and price cuts as a percentage growth, the next thing we want to look at is contract price. Believe it or not, the median contract price is higher than it was last year at this time. And that leads us to actually sales price. We can see sales price is basically flat. And sales price is basically flat because when you look at contracts and you go back 30 days, it was basically flat. Do I think they will be negative in June and July? Yes, because in June and July, we saw this big bump up and there's no indication we're going to get massive appreciation this year. In fact, it does feel like it would be a softer year. So I do think at some point we're going to be on this negative year over year for prices, but doesn't mean that prices are really dropping. The thing that I would want to see to say, yes, prices are actually really dropping, I would want to see us go below 2023 prices. And the reason why is because we've been bouncing between this range for the past 3 years, between 450 and 500, if you count everything, between 420 and 480. I want to see us go below those numbers for me to be like, okay, we are getting price drops. I think it's possible it could happen in the fall timeframe. Of course, that's so far out, it's very hard to predict. We could probably see prices drop this year. However, in the direct data, there's no indication of like this massive price drop. Now, let's get back to the question he asked, because he specifically asked about townhouses. And y'all, townhouses are a disaster right now. Now, how do I know they're a disaster? Well, for one, I've had multiple conversations with developers and investors where they had a slew of townhouses that they couldn't sell. So they decided to rent them. And even that is going bad. Some of these are burning through cash, but interestingly enough, they're still not making it to foreclosure. One investor I talked to lost his entire investment, and yet there's no foreclosure that I'm aware of. But there's a lot of inventory sitting on the sidelines, even waiting to be listed in the townhouse space. So could he be right about townhouses? Yes, he could definitely be right about townhouses. And the other problem with townhouses, you've got a lot of first-time home buyers. They're using 3.5% down. They're getting FHA mortgages. They're paying monthly payments that are sometimes $1,500 higher than what the townhouse they're living in would rent for. Those are recipes for disaster. Look at the rent. If it rents for less than your mortgage payment, and you look around and you're buying the same thing that everybody else is buying on that block, chances are you're setting yourself up for a major, major disaster. Please don't do that. Please do not do that. Kim McElroy actually says it the best. He says, I put $30,000 down on a condo 30 years ago. It's worth $230,000 today, with only $3,000 a year in growth. I'm assuming he's talking about appreciation. Why? Too much competition kept prices low. Today, I'd pick unique properties in overcrowded markets. Now, I echo Kim McElroy's sentiment. If you want to stand out in the crowd, make sure you're picking something unique. If you pick something like a townhouse or first-time home buyers that are over-leveraged and paying way too much monthly, you're setting yourself up for major risk. I would never, never, never recommend doing something like that. Now, if you're doing it and you're assuming a 2.5% mortgage, if you look at your rent to mortgage payment and you can make it work because your mortgage payment's lower than what it would rent for, which, by the way, I helped someone do that, do it. Now, I've got someone right now that's buying a house 2.25% mortgage rate. He's assuming it will rent for $3,000 to $3,300. His mortgage payment will be $2,000. He's amortizing $800 a month. That's not a bad deal. That's not a bad deal. So there are ways to prevent yourself and hedge yourself in a dicey market. But the major thing he says here, unique properties. Buy something you can afford. Make sure it has some unique permanent characteristics like location, like lot size, something that gives it an edge over the properties around it. I agree with this. I think Ken, who is a phenomenally successful investor, is on it, and he can give us some really good advice. If you are planning to buy, look for those unique permanent characteristics. Now, the other thing you need, and look, yes, I'm a real estate agent. Yes, I do help people buy. If you're buying in this market, which by the way, I'm not trying to get anybody to buy. Look, there's going to be 27,000 people that buy in Middle Tennessee. I'm trying to help the people that are planning to buy. And people are like, oh, Ethan, you're pumping the market, or you're, because I'm not saying prices are going to go down to 2019 levels. Look, I told you guys, I have no idea where prices are going to go because I don't know what the Fed's going to do or what the president's going to do. I don't know what they're going to do to our dollar or what they're going to do to cost to build. I don't know. But what I can tell you is what's going on right now. And what I'll tell you is hyper local. You want somebody that has the data by neighborhood, by area. Like, look at this area right here. This area is basically crashing. This is an Edge Hill. And I looked at this area because I was looking at a condo in this area. It's wild what's happening with prices here. But look at this chart right here. You can see it. where this right here, peak price is $900 a foot for these condos. Now they've dropped below $700 a foot. And believe it or not, for these same condos, there's one below $600 a foot now. Y'all, this is a crash. So don't, look, even if prices don't go down, there are neighborhoods where prices could crash. There are also neighborhoods that can stay relatively resilient. So you want to talk to somebody who's very familiar, who has data on their side, who's strategic, who can find value hacks like mortgage assumption. And you want to be careful. Take your time. There's more options this year than last year by thousands. Take your time. It's growing. It's going to be growing every week for the next 6, 8, 12 weeks. And as long as it's growing, I mean, look at that. We're well above where we were last year. We peaked at 9,400. There's more in the market now by several hundred than there was last fall when it peaked. Y'all, you have opportunity out there if you want to buy. But it's up to you. If you're worried about prices dropping, don't buy in this market. Doesn't mean they'll drop. But if you can't stand the thought of prices dropping, just don't buy, rent. But if you want to buy, I'm happy to help you. And with that, I hope you guys have a great rest of the day. I look forward to seeing you next Saturday. Thanks a lot.